This is Justin Pulitzer. This is my weekend video for October 5th, 2014. Wow, I can't believe we're in October already. Time is really flying. Anyway, so let's get into a discussion of the markets here. I'm going to start off with the S&P 500 ETF, the SPY. So I had discussed a couple of weeks ago that we had this Fed liquidity event that took back a lot of weakness in one day, and then we had a Fed event here, which was a doji at the top of the range. I had said that this was a go with either above or below, and it, on a confirmation break. And you can see up here we looked above, but we wound up failing and coming back down quite precipitously. I did intraday here say that there was a long here off the 50-day moving average, just because it was the first touch off of an all-time high. We wound up having this really big reversal bar, but look where it stopped. It stopped right at the bottom of the Fed day, the price action. So I had taken some profits up here, not quite at the exact high, but pretty close. And we wound up having a bit of a tumble the next session, a really big bearish bar. We took out that 50, came back low, and took out this entire range. And the next couple of days, we kind of just did a little. The next day, there was a pretty decent rally attempt, but we were still having trouble with this 50-day moving average, and we wound up coming back down and losing it. You can see on this day, this bar here. I had actually tweeted on the stream. I had it up. I guess it got closed, but if you want to go back and take a look, I had tweeted out that I had said that I thought that there was maybe another 20 to 40 points down, that the pessimism was getting really very heavy, and that I was going to be a buyer in that range. And what I was thinking was, if you take a look at this this decline here, this was about $8.51 before we rallied up to make a new high, and that similar decline would have brought us down to 193s. And I knew that we also had the breakout zone here in the 200-day moving average. So I knew that somewhere in here would wind up catching support, and we did. You can see we had a bit of an excess low here on Thursday, and you often hear me discuss on the stream poor highs or poor lows that are subject to liquidation breaks or what have you, liquidation rally, or or a rally if it's a poor low, and we had we wound up getting that. We had excess here. We wound up getting the rally, and we came back up over the 38.2 fib, which is bullish, and we stopped just shy of the 50% fib. So my thinking here is that the market has a little bit of room, that it does have a little bit more room up, but it does have to really prove itself. I'd like to see it get back up over the 50-day moving average, which is the 197.63. And then the 61.8 fib, which is 98.25. I'm thinking that somewhere in here is probably going to wind up being a little bit of resistance for the market, just because that was sort of where the breakdown level came, and this is, you could see the low of this candle was at 98.5. So I would think just if we do wind up coming up here, this should be some resistance. If it's not, like the market, we could maybe come up and make a new high. I'll be looking to see how that goes. I don't really have much of a bias here. I'm sort of a little bit more neutral now that we're getting close back to the 50%. I had definitely thought that this was a long play. I did play it long, and I'm still a little bit long, thinking we could probably come up here, but with obviously with a tight stop on it. My thoughts here, what would be the most bullish thing for the bulls to have happen is to come back up here, have maybe a little bit of a pullback, to put in a bit of a higher low that, this here is obviously a very hard stop. I think if we lose this, we're going to come back down very quickly into this breakout zone, maybe to test the 200-day moving average. Probably it would be an absolute free fall into that point, although I do think we would find some support in this area, and then there would be a whole other scenario of, setting up with now equal lows to have some type of a head and shoulders pattern play out. But let's not get ahead of ourselves. What would, to me, if we did come back down now to make that higher low, it gives long something that's not as far away. You can see that from the low here to the close here is like $4, and that would give long somewhere, with a tighter stop that they can play long against. And then if we came back up over the downtrend, then I think it would be a much easier play long if you're first entering now. Again, though, it's a go with. If we do wind up breaking these downtrend lines, I'd be playing long, looking for this move back up, into range here. So it's kind of it's kind of a little iffy. We have to see how the market plays out. If we do come back down, we're going to be looking for that higher low scenario to play long against. If we do come back up here, we have to see where sort of if this resistance holds the market. If it doesn't, then we're going to go back up higher and probably retest the high. So let's see what happens. I'm very cautious here just because of what's been going on. This type of a move is very steep. I didn't like that this reversal bar here got taken out, and I didn't like that this bar here got taken out in such a steep fashion. So now if we come back up into there, I think a lot of people would be looking to be made whole. I want to see how that handles itself if that happens. Also, the IWM, which I've been saying is a short, did wind up doing what it was supposed to do. I had been talking here about lower highs and then higher lows, and that a break either of the downtrend line would be a move to fill up the triangle here, and that if we broke this uptrend line, it would be a move to fill up the triangle here. We wound up with the break. I said that this would fill up. It did. I, in real time on the stream, discussed covering at these reference lows. It actually wound up making a little bit more of a low, probably just to test below there and run some stops, but you can see we did wind up rallying back up, and we came back just up to this breakdown point here. My thinking with IWM is that it's probably still a short the rips situation. I'm looking for it to come somewhere. I have 2 time frames on here on the 38.2 fibs. I'm looking for some type of a rally up for me to reshort. If you lose this low here, it's a reshort right away, I would say, for a play much lower. But if we do wind up coming here, I usually don't like to play for the horizontal breakdowns. They're a lot harder, although this to me, this support wouldn't hold as well on we've already on a third touch. If we retouched it again very quickly, it would probably give. I for one would like to try to short maybe a retest of this this previous uptrend and coincide with these 38.2s fibs and also this congestion area. I think that would be a good right or right out type of a trade. If we do wind up catching a bid and the market comes up, just right or right out, and then retest again at this confluence of these moving these large moving averages. You have the 50, the 100, and the 200 all up there, and also the 61.8 up in the 113s. If again right or right out, if that doesn't work, then we'll be looking for the downtrend line. I do think that there will be a short point in here, and that this is not going to be such an easy trade for the longs for bulls to take back. Maybe I'm dead wrong. Maybe that doesn't work, but I am looking to play that short on rallies, and I will discuss entry points on the stream throughout the week. I'm going to take a little bit of a divergence here. I usually don't talk about currencies, but the dollar has been so prominent, and it's in such a parabolic type of a flux that I kind of had to discuss it. If you take a look, this was like the last old high, so we had a bit of a breakout. But if you look at the dollar on a bit of a longer term chart, if we go back in the Wayback Machine to, let's say, we're looking on a 20-year time frame, the dollar had been much higher in the go-go days at the peak of the dot-com boom, and it had a very precipitous decline and came down. Here we've just been kind of building a base and chopping, and we're now making higher lows. And not only do we have higher lows, we're now starting to put in higher highs. So the dollar to me looks pretty bullish. I'm thinking that there's probably going to be some type of a top process, just short term. Longer term, there is obviously a ton of room for it to go higher. But somewhere in this area here, with this old 38.2 fib and where this breakdown came here in the 90s, so somewhere to me in between this old high here, this 92.53, and this peak here was 88.90. So I'm going to be keeping my eye out for some type of a reversal pattern in the dollar, somewhere in this 90 range, just for a pullback. It's also the 200-month MA, which may provide some resistance. So that to me is what I'm looking for with the dollar, some type of a move into this area, and then a bit of a pullback. Preferably it'll be a parabolic move where we'll do it in a straight line. Those moves are a little bit hard to step in front of, but it's like I said, right or right out, based on those levels. Longer term, if this does have some type of a pullback, I'd probably be looking to buy the dips. Honestly, I like that pattern of higher highs and higher lows. So the dollar to me on the longer term is probably looking a little bit more bullish. As the exact contrary to the precious metals, this has been very bearish chart in gold. You can see we're in the process now of first starting to break this low here of this 114.68. I mean, gold really has to catch itself here between this 61.8 fib, which is 111.78, and this low here, which is 114.68. If it can't, you may even fill this up and retest this breakout into the 1,000 range with gold. That honestly would not shock me to kind of see like a complete reset and retest there, and I think that would really shake out a lot of the bulls and probably set up for an amazing long-term type of a play. And I'm not even talking about just for a few points, but I'm talking about hundreds of dollars. You could probably buy it here long for a retest back up into this breakdown. That would be absolutely incredible to buy this at 100 and then play it to maybe, the breakdown to 114. But we'll see. This is starting to look like it's giving. You can see silver already gave, and silver is sort of like the poor man's gold. It's sort of like the Momo levered up version. And you can see the low here was 1775, and this is really breaking with some conviction here. It's actually into a bit of a fib retracement here, so it may find some legs. But you can see there is definitely plenty of room here for this thing to come down a little bit lower and retest really into this congestion range, back down into, I wouldn't say 13s, so it's a little bit of a bold call, but for sure maybe the next $2 or so is lower into like this 14s or maybe 15s. So that to me doesn't portend well for gold. So I'd be really, really, really cautious trying to be getting long the metals, and I would think on rallies it's probably a short at this point. Have to be a little bit careful because this could be a failed breakdown. But to me, this looks like it. This to me looks like the real thing. You have this bear flag and this consolidation, and then just wham, you're coming down. So I definitely think the metals show that there might be some more room up in the dollar. You guys don't know me necessarily for playing commodities. I'm more of a momentum stock player. So let's stick with the rivers and the lakes that we're used to, so to speak. If you take a look at Apple, Apple had this really big gap up here on their earnings, and had a little consolidation, and then since then has been in this upward channel, and we're sort of near the lower part of that channel. For me, for Apple, to get long, I'd like to see this pattern play out where it stops making lower highs. I had said that it was a sale in the 103s, and you could see we had this really precipitous decline right after that, and we've just been in this this kind of chop pattern, I guess, to work off the excess. I know a lot of people are long Apple, and I think that it would be really an amazing buy for earnings if they wound up getting washed out and we had some type of a decline that kind of just put a little bit of the fear of God into them and scared them with a bit of a decline, and then it would set up, because I do think the numbers are going to be good. I don't know if I necessarily get that. I mean, the sideways consolidation could also be working off the excess, and then maybe we get the pop higher onto the earnings. I do think anything that breaks the old high of 103.74 takes us into the 109 range, which is another Fibonacci extension. I unfortunately don't think it's on this particular chart. No, it's not. I'll add it in for next week, but believe me, it's there. And I would say any move over this downtrend line is probably a buy for a move to fill up the triangle back up to the old highs, and then we'll kind of play wait and see, how it takes it there. But Apple, below it's sort of just pinned here below the 50 and the 20, so it's really not showing anything other than that it's consolidating and shopping. I'd say big picture, it's more bullish. For the quote-unquote now time frame that I always talk about, it's a little bit of wait and see. We want to start seeing some higher highs with some higher lows. We've had equal lows. Now we need some higher highs. And a break of this downtrend line for me, you could even see now we have a bit of more of a steep downtrend within the course. So I would think that somewhere around here is probably a safe buy if you're buying on the downtrend. On the up channel. At the channel low, it's probably a buy for a right out trade, but I'd say the higher probability would be a break of this downtrend and then playing to fill up the triangle up to the old highs and maybe even up to the channel highs, which would take you into the 104s. Facebook has been kind of a beast. I had discussed it being it's working because it's working, and anything over this 76, 74 to me is bullish, and we've kind of been in this wedge. We've tested below it a few times and held the 50-day moving average twice. This little rally here on Friday was a little bit disappointing though, because we didn't really come back up as hard as as it has in the past. Although Facebook has really kind of been just like this chop move. Like when you do come down hard, you take it back really quickly, and then there's sort of like this chop. So I would say that as long as we're above this 20-day moving average, we're still pretty bullish, and as long as we're above this in this rising wedge, it maybe we get up a little bit higher. I have been looking for at least 80 on this. I do think that there's some responsive sellers there. So if we do get back up close to 80, I would probably be looking to take some profits, and then looking at to maybe buy the dips. That's my thoughts on Facebook. I do think they probably are going to have pretty decent earnings. I do think that the stock is still bullish, considering we're in this trend. If you're really kind of late to the party, I would use the Thursday low as your stop point. So that's 75.64, and if that gives, maybe try to rebuy on one of these trend lines for a bounce back higher. But like I said, I am still looking for that 80. We'll see what happens. So Facebook is, kind of just consolidating up at the highs. Nothing really more to say other than that. Twitter, on the other hand, is starting to show some teeth, which is good. Maybe we'll start making some of my upside targets here. I have been looking for a retest somewhere between this 57.46 and this 58.98, which was sort of the where this gap begins. Maybe we do get a full fill up there, but these are my first targets to take some profits. And you can see Twitter here has been in this consolidation pattern, and here we're starting to break out above. We had a bit of a weaker close than I would have liked for a first day breakout. You have to be on guard here. This could be a failed breakout, and then we come back down and retest. But I've kind of broken it down on Twitter. I said anything above 48 is bullish, anything above 50 is more bullish, and then anything above 52 is even more bullish. And now we're, we are making some newer highs. So above this old high, 53.64 is pretty bullish. If you're again late to the party, you could use this this rising trend line here as a stop. So as of now, if we came back down, you would, I would say actually if you lose this breakout bar, you probably want to maybe take some profits, because that to me then would be a bit of a failed breakout. So the low on that is 52.11. So let's just say 52. If you're really concerned, like I said, anything above 52 is bullish. I'm going to stick to that. So anything below 52 is a little less bullish. So let's stick to that also. So 52 here now is our, let's say that's our line in the sand if we're a little late to the party. Let's take a look at Gilead. I know a lot of people have been requesting me to discuss this stock. It's really not. I'm not really a big biotech fan, so I don't really cover these stocks that often. Although it's had a bit of a move, and I thought it would be a good idea to discuss it because I know a lot of you guys are playing it long. You could take a look at Gilead. It's sort of been in this this move higher. You've had this had a bit of a pretty steep decline here of 20 points. And then it's now really come up pretty strong. I'd be a little cautious in Gilead. You can see there's this sort of upward bar that's proved to be resistance. You see we came down here. Here we didn't even quite get to it. We came down, but here we came up to it, came back down, chopped sideways, and then came up to that old high again and then dumped. So this pattern here and this pattern here are starting to look a little bit alike. You can see we came up here, we had a test below, retested the high, and then came down. So I'm not saying Gilead is bearish, because you're still in a rising wedge, but you can see it's moved a lot. I mean, the stock has had some pretty big price movement, and now it's kind of consolidating and chopping at the highs. We had a bit of a double top here, so for me, the play would be probably to take some profits if you happen to catch this and be long. And I would be I'd be a seller more on rallies, I think, here than a buyer and a chaser, just because of the nature of the move, and just because this is starting to look a little bit like this. So I would just say be cautious with Gilead. I think it's a buy the dip stock. If you can get this thing to come back down, I would be looking to buy. If it gets anywhere back into the 80s, it's probably a retest of this breakout. To me would be pretty bullish, at least for a bounce back up. But I would just say caution up here. I mean, it is in this. It could continue to play in this rising wedge, although it's narrowing. It's had a. If you look at this range here from this low to high, the 161.8 fib was taken, and then I guess you could make it up to the 261.8 up around the 118, which would be really toward the side of this wedge. But playing these narrowing wedges gets a little bit harder if you have late entry. If you're playing long, if you're looking for momentum, anything over this 110.64 to me would probably be bullish, and you probably would get that move up higher. Anything chopping here is a little bit more cautious, so just be mindful of this wedge. And I would say your 50-day moving average here is probably going to be important if you're playing long. I would use that rising 50 as my stop. I don't have a position in this stock as of now, right now, by the way. Google is, to me, again, really choppy and not really presenting itself for anything other than the fact that it's choppy. You can see I kind of had thought we were going to come up and retest these old highs. We were in this pattern here of higher lows when we made some equal lows but with a newer high, and then we came back down with a low. I think Google is probably going to just chop a little bit until their earnings, where we'll get some resolution either up or down. We held the 200 AMA. We kind of stopped at the 50 here. So I guess the pattern is probably not as bullish as it may have been here, but it's, to me, just chop in this range. And the consolidation is probably, we're gonna get a break pretty hard one way or another on earnings. So I'm not really ready to make my earnings call yet. I will do that on the stream probably in the next couple of days. But as of now, it's really just chop, and it's probably actually looking a little bit less bullish than it had been. Like I said, this low here on this 200 is going to be key. So if you're playing long, the 574.05 level is really key. I'd say a break below there, and you're probably going to be looking into these fibs, maybe into easily back down to these lows, because it's not that far, into the 567, and then maybe you test the 560 for the halfback. And then we'll have to kind of reassess. I don't know if you're going to be able to make it to the 61.8 here without earnings, but we'll see. This, like I said, this is a very muddy pattern. There's really not much to do with it as of now, other than I would say maybe play the extremes of it. If you're kind of toward these lows, play it long. If you get up toward these highs, maybe take profits or play it short for a bit of a retrace. Nike is not one I had talked about, although I would say that this stock is an easily a buy the dip stock now. What I think is happening here is that you had this gap up, and it's held. You can see the market has been correcting, and Nike is at highs. I mean, it made a new high on Friday. What I think is happening here is that funds are using Nike as their proxy for a retail long because they already reported and had good earnings, so they feel safe buying the stock as a long, because it doesn't have as much gap risk because their earnings are already behind them. So I'm thinking Nike is probably, it looks like it's breaking out here. Let's see if it has some continuation next week. If not, it'll probably just come back down into range. But I think you can play it long as long as it holds this low here, this reversal bar, this 86.88. And then, obviously it's a long over the earnings gap high, which was really 89.90. I believe that this was a longer term high from the past. Let's take a look. Oh, no, we're in fresh air. So I would say you could probably play Nike for a continuation higher as long as it's over this high from the earnings bar. Anything below that, if you're a little late to the party, what am I doing here? 3 months daily. If you're a little late to the party, you could use these lows, let's say 86.88, just because that was this last one, as for sure a firm stop. If you lose that, you probably come back down to the rising 20, wherever that may be at the time. But anything up over this 90 to me is bullish. I think it's showing some really great relative strength to the market, and I think it probably is going to continue higher. Price line. Oops, and I didn't type in the symbol right. Price line, I have been talking about coming back down to retest these reference lows to set up for a long, back down to this 1087. It hasn't quite gotten it there, but it's still holding this downtrend line and showing a lot of relative weakness to the market. You can see we did put in a bit of a hammer here, but it's been really just hovering around these lows. So I'm looking to play this long if we could get a test around this 1087. I think Priceline's having a lot of problems because of the rising dollar. They do a lot of business overseas. So maybe the Priceline lows come in along with the dollar highs for a little bit. maybe this has a little bit of a bounce here. I'm just kind of speculating, but that's what my thought is on Priceline, that the rising dollar is hurting the company. So like I said, or at least the stock, I'm looking for a buy around that 1087. We'll see if that happens this week or next or whatever. Maybe we do get back up to the downtrend line, which would to me be a right or right out trade for a short. It would also coincide with this this breakdown level. So I'm thinking Priceline maybe short up here around the 1180 if we got up there, and then but really I'm looking for the buy more on the 1087. So that's Priceline. Let's take a look at the last one. The one that everyone wants to know about, right? Tesla. So Tesla, I had said was a sale around the 290s. I always think playing for the last 10 in a move to 300 is the hardest one. I thought that the stock looked pretty bullish. It was flagging here, and then we had a Morgan Stanley downgrade, and the stock came down, and then we had a bit of a rally up, which was to the old highs, the 265, which I had said, and then boom, we came down. And we tested the 100-day moving average. This area has been somewhat of support in the past for the stock, with a little bit tests below. And then there was also a primary trend line, and I had mentioned here that this was a buy point, and it wound up being a hold. I was actually looking for a little bit lower, but we rallied up on some news here of the Model X. I'm sorry, the Model D. It looks like for Elon Musk had tweeted out, and then you got a bit of a squeeze going. So you can see we came back up here to a 38.2 fib, and this was the secondary trend line in the back. So I would say Tesla probably has a little bit more room up. Maybe it does get some legs into the event with a short squeeze up to the downtrend line. But it's starting to get into some territory where it might find a little bit of resistance. I do think that that it does probably continue rallying a little bit more into the event, just because that tends to be the pattern, right? Buy the rumor, sell the news. So if you were long and you happen to buy it down here, I'd probably be looking to probably take some profits on some rallies. If we can clear this level here, though, this 265.60, I would say the squeeze is probably on, and we'll probably see 272s pretty quickly for a rally up here. So I'm going to keep that in mind for a Momo play over the 265.60 for a play up to these 272s, where this bar kind of where you kind of had this breakdown out of the range. So that's going to be, I think, the higher probability play to play it up over these highs for a squeeze. Coming into here, though, you could probably, like I said, probably play it a little bit long for into the event, but it's probably a little bit less of a buy here now that it's had this rally, and I'd be looking to take some profits somewhere on this downtrend line, wherever that might be. This might be in the 260s here if we do happen to get up here. So that to me is Tesla. If you have any questions for this, please feel free to message me on the stream. My handle is @JustinPulitzer. I'm happy to answer questions. You could also please like this video if you found it useful, and I look forward to trading with you guys during the week. So let's have a good one.